in essence, choose to revalue it the way that Roosevelt did in 33 and the way that Nixon did in 71 or 72 and 73 after he closed the gold window in 71. He did revalue gold the next year by about 7 or 8% by devaluing the dollar and pushing gold from 35 to 38. And then in 73 from 38 to 42.22. Gold revaluation is not a new phenomenon. And who would it benefit? Well, it would benefit all the central banks. So I think numbers higher than most people would consider to be prudent to say publicly is realistic.
In today's news recap, gold rises as dollar eases ahead of U.S.-China trade talks. Gold rose over 1% on Friday as the dollar ticked lower, while the market digested comments on tariffs from U.S. President Donald Trump ahead of a weekend meeting between the U.S. and China. Spot gold was up today at $3,340.29 an ounce and has gained 3.1% so far this week. Bullion, known as a hedge against geopolitical and economic uncertainties, has risen more than 27% since the start of the year. The U.S. dollar edged 0.3% lower, making bullion less expensive for other currency holders. President Trump said that an 80% tariff on Chinese goods seems right as representatives prepared for weekend talks to contain a trade war between the world's two largest economies. Additionally, on the geopolitical front, India and Pakistan accused each other of launching new military attacks using drones and artillery for the third day in the worst fighting between the nuclear-armed South Asian neighbors in nearly 3 decades. Obviously, the overall continued uncertainty in regards to tariffs remains probably the most significant underpinning behind gold, said David Mager, director of metals trading at High Ridge Futures. We're not quite as favorable towards gold as we have been over the course of the past several months. We could be moving into a period of more consolidation or retracement for a period of time. On the physical front, Indian gold dealers offered price discounts this week amid weak demand as a weaker rupee lifted local prices to near record highs, while buying in China picked up after a holiday. Elsewhere, Trump's trade policies will likely lift inflation, lower growth, and raise unemployment later this year. Federal Reserve Governor Michael Barr said, leaving policymakers with a potentially tricky decision on which problem to fight. Spot silver added 0.8% to $32.75 an ounce. Platinum rose about 2% to $995.10, and palladium climbed 0.2% to $200.80. $977.68. Now we'll show you the best clips of the latest interview. Don't forget to like, subscribe, and turn on notifications so you do not miss out our daily recaps. And check goldsilverstacks.com to get your Stacker's Handbook, the ultimate guide to stack gold and silver, packed with strategies to trade the gold-silver ratio and get more ounces and build wealth over time so you don't have to rely on market commentators to make your investment decisions. Enjoy the episode.
Picking a number is very challenging. Of course, you have Goldman Sachs saying as high as $4,500. You have other mainstream pundits saying $3,700 to $4,000 in that range. Talking about gold reaching a level, in the thousands of dollars higher than where we are right now is not that outlandish. First of all, if we were to look at the United States becoming a net importer of gold. I don't ever remember it being a net importer of gold. There were 1 or 2 years where we did have net imports, but not like we are seeing now where, more gold has been imported to the United States since January than at any time since the end of World War II when we took over for the pound sterling at the Bretton Woods Agreement. Everyone sent us their gold. Something big is happening with gold. And of course, you see Trump's a tweet the other day on Easter Sunday. He says, the golden rule of negotiating success, he who has the gold makes the rules. Thank you. You see talk of revaluing gold, which was held in the gold revaluation account. That's actually the name of it, which you can't make up, whether it be the head of the Bundesbank or the Dutch National Bank or members of the governing board of the Bundesbank or Senator Loomis from Wyoming, all talking of gold revaluation. Whether we talk of Judy Shelton, Trump's former nominee to run the Fed in 2016, who advocates for 50-year treasuries backed by gold, or the Treasury Secretary currently of the United States, who largest holding was gold while running a hedge fund and is prior to becoming the Treasury Secretary, and is a self-proclaimed gold bug. There's so many things happening that make you wonder and think. Now, to Jan's point, it would certainly benefit the United States and all the central banks to see gold revalued to a much higher level, whether it be by the market slowly, as we've seen, slow and steady, tremendous appreciation that's gone unnoticed by the mainstream, which is really shocking to me, which tells me we're still very early in the game, or something more dramatic where, they come in and revalue gold. Every $4,000 increase in the price of gold gives the Treasury General account $1 trillion free and clear. So, you see gold at levels of, 4,000, 8,000, 12,000, whatever that number is, at $12,000 an ounce. And I think that's the number that James Rickards came up with.
In today's news recap, silver prices climb on safe haven demand. Silver prices rose over 1% to approach $33 per ounce on Thursday, recovering losses from the previous session as investors sought refuge in safe haven assets amid persistent economic and trade uncertainties. The rebound followed the Federal Reserve's decision on Wednesday to hold interest rates steady as expected. However, Chair Jerome Powell adopted a cautious tone, highlighting rising risks to both inflation and employment, and dismissing the possibility of a preemptive rate cut to mitigate potential economic fallout from new tariffs. On the trade front, President Donald Trump announced via Truth Social that he would hold a news conference Thursday to unveil a deal with a big country, reportedly the United Kingdom. Meanwhile, he reiterated that he would not roll back tariffs on China as a precondition for starting trade talks ahead of this weekend's scheduled U.S.-China negotiations in Switzerland. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button, turn on notifications, and check our new Numismatics Handbook. Most stackers want to get active, but swapping their metals for dollars isn't an option. There's plenty of opportunities in the overlooked numismatics world. Mastering U.S. coins, key dates, and errors pays off by multiplying your ounces and capitalizing where others aren't paying attention.
Video talked about when gold was backing the currency prior to 33 over my shoulder there. It was just backing M1, which is the notes in circulation. M2 is a broader measure of the money supply. They got rid of M3. They said it was archaic. So currently the broadest measure that we have access to is M2. And that's largely credit. It's 92% credit. So when you look at your bank account and you see $50,000 in there, that's credit. That's M2. The bank owes you the notes, they promise to pay it to you, but M1 is the currency in circulation. M2 is only 8% currency, 92% credit. So when gold was backing the dollar prior to 33, it was backing M1. If you take M1 right now, 2,365 billion and divide it by the 261 million ounces we supposedly have, you get $9,044 an ounce. Could that happen? Yeah, why not? I mean, why not? Why not revalue gold to a level high enough to start to whittle down the debt and benefit the central banks on the planet who, for the last, really since 2017, have been on a binge buying and repatriating, and largely because of many of the things that you've talked about for years that enlightened me, namely the reclassification of gold, the tier 1 status, and the importance of owning an asset that has no counterparty risk. The way that the mechanism works, in essence, is if you had gold at $8,000 an ounce, the Treasury would issue gold certificates to the Federal Reserve. the Federal Reserve would, in essence, just create that money and give it to the Treasury General account. They now would have, at 8,000, they would have $2 trillion free and clear to do with as they see fit. Those certificates do not give the Federal Reserve access or a call on the nation's gold. It's the fiat equivalent of it. So it's kind of an accounting gimmick, to say the least. So I guess I would just simply say this. Something is very different with gold. There is no question about it. When you see the massive amounts of gold imports into the country, when you see the massive amounts of imports to the BRICS nations, the continual drive to repatriate and accumulate gold on all levels, using all different techniques, even flying around the world as China is doing, buying doré and concentrate to disintermediate the marketplace. You got the largest producer of gold in the world and the second largest producer of silver flying around the world buying doré and concentrate, so no one knows what they're doing. There's a push, I believe, to reintegrate gold, Andrew, into the monetary system. And that's why it's slowly bubbling higher. The volatility keeps people at bay. The volatility keeps the mainstreams, or the normies, as Cliff High calls them, out of the market. But yet it's slowly revaluing and being reintegrated, I believe, into the system rather than reacting to something where it just shoots up. It's the old frog in the pot of lukewarm water that the heat's slowly being turned up. So the question to me really is, how high does it go on its own? And will they?
What do you think of Schectman's take? Do you agree with his view on gold? Are you buying this in the stock market? Are you afraid of high volatility? Post in the comments section down below your honest opinion and share with the stackers if you're buying more, selling, or getting active in the numismatics world. Let us know. We really want to know. Now watch this video right here because it's a perfect fit for you, and I'll see you on the other side.